So guys, we're in the middle of earnings season, and that is a really interesting time to be an investor because all of the companies are basically opening up their books and they're showing us the good, the bad and the ugly. And as I'm sure most of you know, then are the news being reflected directly into the share price in either a good or a bad way. And the good thing about it is that sometimes does this volatility create a golden buying opportunity that you really shouldn't miss. And in today's video, we are going to be talking about 3 heavily discounted dividend stocks that are looking like a really good buy as we just went into November. But real quick, then before we get to those, then I do want to hear from you as well. So please leave a comment below and let me know which companies you have your eyes on at the moment. So moving on to the first discounted dividend stock on my list today, and here we have a company that I'm really excited about, and one that I'm probably going to add to my own personal stock portfolio as well. And that is the medicine giant, Eli Lilly, ticker symbol LLY. And this company has really gained a lot of attention over the last couple of years as they just developed a new major drug for weight loss called Zepbound. And they are with Novo Nordisk, the market leader within this huge evolving industry that is estimated to be worth $4 trillion by 2035, or roughly 2.9% of the global GDP. And that is an absolutely ridiculous number. But the company did just release their quarterly earnings report, and they missed the analyst estimates, both on revenue and earnings per share. And when looking at the performance of their 2 major products, Zepbound and Mounjaro, then did those 2 also perform a bit worse than the analyst estimates. And Zepbound had $1.2 billion in sales, and the analyst had estimated $1.6 billion in sales. And looking at Mounjaro, then did that drug produce a total of $3.1 billion in sales, and the analyst had estimated roughly $3.6 billion in sales. But despite the bad earnings report, then is Eli Lilly still up by more than 33% year to date, and more than 590% over the last couple of years. And they have more than 100% year over year bottom line growth. So it's not like the company is falling apart or anything like that. They are still going very, very strong. But let's just dive into the actual share price performance. And here we do see that over the last month, well, then is Eli Lilly actually down by almost 8%. And we can also see on the graph that Eli Lilly did release their quarterly earnings report at the end of October, where they did take a heavy beating. And if we do zoom out once and look at the year-to-date performance, well, then are they actually up by almost 40%, and that is a really solid performance. So even though they did miss their quarterly earnings report, then I do think that Eli Lilly is a really solid company, and they are looking very, very strong going forward as well. So it might be the perfect buying opportunity right now. But let's just have a look at their dividends as well. And they currently have a dividend yield of 0.63%, and it's not like that is high or anything, but they do have a 5-year growth rate in their dividends of more than 15%, and that is very, very nice. And they have been increasing this dividend every single year for the last 9 years in a row. So they do have a pretty low dividend yield, but they are growing their dividend at a very fast pace. And having fast growing dividend stocks in your portfolio is always really, really nice. But they are not only increasing the dividend at a very fast pace, but they are also growing the company at a very fast pace. And the combination of those 2 is really nice for us investors. So moving on to the second discounted dividend stock on my list. And here we have another really interesting company, and that is ASML. And they are basically the world supplier to the semiconductor industry. And essentially what they do is to create the machines that are then being used for creating semiconductors. But the products that they are producing are very, very advanced products. So I'm not going to go that much in depth with exactly what it is and what exactly they are being used for in the production of semiconductors. But they are basically one of the only companies in the world that are producing these products. And given the very strong growing demand for semiconductors, is placing ASML as an essential player in the semiconductor supply chain. But anyways, let's take a look at their actual share price performance. And over the last month, we can see that ASML really took a big hit during mid-November. And that is exactly where they did release their quarterly earnings report. And we will get back to that one in a moment. But this report basically resulted in a drop in share price of 18% during the last month. And that is a big drop. And if we do zoom out and look at the year-to-date performance, well, then are they actually down by 11%. And if we do zoom out once more and look at the last 12 months, well, then is ASML actually up by 12%. But going back to their monthly performance, then can the reason for the big drop be found in their earnings report? Well, they did actually report a 20% growth quarter over quarter in sales, a 30% net increase in income, but the bookings came in 50% lower than expected, and that is the reason for the heavy decline during the last month. And the bookings are basically showing the total amount of orders that customers have placed that they haven't received yet. So it is basically showing the demand for ASML's products, and having a lower demand than expected is obviously a really bad thing, and that is exactly why ASML took a big hit during the last month. But let's just have a look at their dividend stats, and this is a very fast growing dividend stock, and they currently have a dividend yield sitting at 0.98%, which isn't really too exciting to be honest, but a 5-year growth rate of more than 23%, and that is absolutely insane. And overall, then is ASML a really solid company that has performed very well over the last couple of years, and they did just miss the earnings report, and that could indicate a perfect buying opportunity. So if you have been looking at this company, well then right now might not be the worst time to buy. So moving on to the third and last discounted dividend stock on my list, and here we do have a dividend king, and that is PepsiCo, ticker symbol PEP. I think that all of you know exactly what PepsiCo is, and you've most likely bought some of their products, and you're most likely also buying them on a regular basis. So let's just skip the introduction and get straight into it. And they currently have a share price sitting at $166, and during the last month, then are they down by 2.66%. And if we do zoom out and look at their year-to-date performance, then are they down by 2.21%. And even though it doesn't sound like that much, then finding discounted dividend kings that are actually underperforming the markets by these margins are not something you see very often. And adding dividend kings to your portfolio at a discounted value always feels very nice. But let's just get straight into their dividends. And they currently have a dividend yield sitting at 3.26%, a 5-year growth rate in their dividends of 6.83%, and they have been growing this dividend for 51 years in a row. And that is of course what makes them a dividend king. And increasing your dividend for 51 years in a row is absolutely insane to think about. And overall, then is PepsiCo a very solid and reliable company. And having those companies in your portfolio is always very nice. And that was basically my top 3 discounted dividend stocks as we just went into November. Let me know in the comment section below what you think about these companies. And also leave a comment below and let me know which stocks you're looking to buy at the moment. Thank you for watching and see you guys in the next one.